currency. Instead, it's tied to gold by its weight. This means that 1 unit of this new currency is equivalent to a specific weight of gold, regardless of the fluctuations in other currencies. Rickards emphasizes that this move brings us back to Aristotle's transitive law, where A equals B equals C, making A equals C in this case. The BRICS have ingeniously anchored their currency to gold, which remains a constant store of value. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
The value of the brick is not determined with reference to any other currency. It's determined with reference to gold by weight of gold. Now, and I don't know the weight, they'll pick one, but again, it doesn't matter because it's not even, it's math, it's logic. And by the way, now we're back to Aristotle's transitive law. This is the key. This unlocks the whole thing. Because Aristotle said, you know, if A equals B equals C, then A equals C. The B can drop out. It's not even arithmetic. It's logic. It's called the transitive law. I'm certain Aristotle invented it. If any Greek scholars know an earlier source, let me know. So what the BRICS have done is they have dodged the biggest bullet, the thing that caused Bretton Woods ultimately to fail, the thing that potentially stands in the way of all this. They've defined their currency by weight of gold. Now, a weight of gold has a dollar value, right? So A equals B equals C. 1 brick equals 1, could be an ounce or a kilo, it doesn't matter. Call it an ounce. 1 brick equals 1 ounce of gold equals today, 1970, okay? Well, through the transitive law, drop out the B and 1 brick equals 1970, $1,970. But that's constant. I mean, that logic works for a moment in time, but it's not fixed because the price of gold is going to fluctuate daily or minute by minute, right? So what's going to happen is the dollar gold, call it exchange rate, the dollar price of gold. So the LBMA, the COMEX, the London Metals Exchange, you know, JP Morgan unallocated forward contracts, the whole huge gold market in dollars is still going to exist. In fact, the BRICS want it to exist. And if I could just digress for 1 minute, Steph, I've never seen an international monetary economic problem with more, that has created more confusion. I won't say misinformation, that's a little trite, but just confusion or maybe deliberate hyperbole than this one. Because let me tell you what this is not. I'm going to tell you what it is, but it's important to know what it's not. This is not the petro yuan. This is not the petro ruble. This is not a gold-backed yuan. This is not a gold standard. This is not the end of the US dollar. It's not the end of the euro. It's not the end of the world. It's not any of those things, but that's what everyone's running around on websites or whatever shouting about. It's none of those things. In fact, quite the opposite. And this is where the Russian mentality comes in. The BRICS want the dollar to be around. They want the dollar gold market to exist because they get the free ride. The dollar has to do all the dirty work in the gold space, and BRICS get the free ride. By declaring 1 brick equal to a weight of gold, again, weight's the key, they just let the dollar gold market go wherever it goes, and the brick is worth an ounce or whatever, kilo, whatever. And yeah, the dollar equivalent under the transitive law changes, but they're not pegged to the dollar. They're not fighting that fight. So this, I analogize this, it's like you're in your house, in the backyard, you know, your landscaper is like digging trenches and putting in plants and sweating and doing all this work, and you're sitting there with a glass of iced tea enjoying the view.
Rickards highlights that while the BRICS are introducing this gold-backed currency, they have no intention of dismantling the existing dollar-gold market. In fact, they see value in allowing the dollar to continue its role as the primary currency for trading gold. This strategic move ensures that the BRICS enjoy the benefits of a gold-backed currency, while allowing the dollar to manage the complexities of the gold market. Rickards is keen to clarify several misconceptions surrounding this development. Contrary to some beliefs, this is not the end of the US dollar or the euro, nor is it a gold standard. Instead, it's a pragmatic move by the BRICS to capitalize on the expected weakening of the dollar relative to gold over time. One of the brilliant aspects of the BRICS strategy, as Rickards points out, is that it puts the United States in a predicament. If the U.S. decides to buy gold to bolster its own position, it inadvertently strengthens the BRICS currency by driving up the dollar price of gold. This dilemma leaves the U.S. in checkmate, as it can't escape the consequences of its actions without weakening its own currency.
In other words, the BRICS get to free ride on the dollar gold system, and they want that system. They don't want it to go away because they get the benefit of a gold value. Now think of what the BRICS don't have to do in this scenario. They don't have to buy gold. They don't even have to own gold. They do, but no one in the world has enough gold to back a currency. This currency, the BRIC, will not be redeemable into gold. Now maybe there's a dealer somewhere who will take it. That's between you and the dealer. But it's not like you're going to be able to march down to the People's Bank of China with a pile of bricks and say, give me the gold. They're not going to do it. So it's not redeemable. They're not going to make a market. They're not going to maintain a value because they don't have to, because it's by weight. They just get to sit back and piggyback on the dollar gold system and let the dollar do all the dirty work, with one twist. And here's the Russian contribution. So you don't have to close your capital account. You can close it, open it, whatever. You don't have to buy gold. You don't have to make a market. You don't even need that much gold. You just say, this is the ultimate fiat currency. The word fiat in Latin means I say so. Well, they say so, and there it is. They put the United States, they're basically, Steph, this is a bet. This is a bet that the dollar is going to collapse against gold over time. I think that's a very good bet. This is not a 3-month forecast. I'm not saying gold is going to go up or down in the next week. Who knows? But over time, now we're into what? Debt to GDP ratios, kind of stuff you look at all the time. Debt to GDP ratios, annual deficits, dare I say, modern monetary theory, or friend Stephanie Kelton. I mean, all these ideas are ruining the dollar, and everyone can see it, but not yet. And so if you want to launch this new currency and you say, hey, long term, the dollar is going to collapse in terms of gold, I'll hook my horse to this wagon called gold by weight, and I'll just reap the benefits, and I don't have to do a thing. You need a big enough block. There is a critical mass, but I would say at this point, upwards of 30 to 40 countries and all the other things I mentioned, that's a big enough block. You're defining it by weight. So the market goes where the dollar gold market goes where it goes, but you don't really have to worry about it because you're anchored to weight. But here's the twist I like. So let's say, and this is how it's going to play out. Now you're the United States. You're like, looks like I've been painted into a corner. What can I do? Well, one of the things you could do, I've told the Treasury this for years, they don't listen. I mean, they invite me in, but they don't listen. One of the things you could do is buy gold. But what happens when the United States buys gold? The dollar price of gold goes up, and the BRIC gets stronger, and the dollar gets weaker. Checkmate. In other words, the U.S. is now in a box where you can't even get out of it by buying gold, because you're going to weaken your own currency relative to gold in the process, and the BRICS are just going to sit there and not lift a finger.
Rickards attributes much of this strategy to Russia, noting that their fingerprints are all over it. The BRICS plan to anchor their currency to gold is a long-term bet on the dollar's eventual devaluation in terms of gold. This is a bet that Rickards believes is likely to pay off, given the growing concerns about the U.S. debt to GDP ratio and the impact of modern monetary theory on the dollar's stability. The recent actions of the United States, particularly in freezing Russian central bank assets, have rattled the confidence of other countries holding U.S. treasuries. This catalyst has prompted nations like Saudi Arabia, India, Brazil, Malaysia, and Turkey to reevaluate their reliance on the dollar. They're now considering diversifying their reserves and seeking alternatives.
So it's genius. I got to credit the Russians. I'm not saying the Chinese couldn't think of something like this, but this has got Russia's fingerprints all over it. And getting back to something you mentioned earlier, Steph. Okay. People have been talking about this for 20 years. The Great Reset, the end of the dollar, the collapse of the dollar, gold to the moon, etc. And it's never played out. And the reason are some of the ones we mentioned, which is The dollar has these huge embedded advantages in the form of its reserve currency status, not because everyone loves the dollar or they even love the United States, but because we have the only bond market big enough to absorb global savings. The US Treasury market is huge, it is liquid, but it's got a whole infrastructure. Primary dealers that bid at auction, when issued trading, settlement, clearance, futures hedging, options hedging, depository trust corporation, settlement, on and on and on. It's got this huge infrastructure of laws, rules, and regulations that they've been building for a long time. I would say 37 years since Alexander Hamilton. But above all, it has the rule of law. The people just trust it. Don't have to like the dollar, don't have to like the United States, but you trust the market. The US, in response to the war in Ukraine, broke the trust. They froze the US Treasury assets of the Central Bank of Russia. Unprecedented. And I'm a sanctions expert. I work for the intelligence community. It was part of what I did was, look at sanctions and CFIUS and a lot else. And as far as I'm concerned, and I know that our BRICS friends agree, that's a default. Maybe S&P would call it a selective default, but Russia made the money. They bought the treasuries. They're entitled to principal and interest. And we're saying, no, you can't have the principal and interest. We're not paying you. Well, that's a default. I don't care how Janet Yellen wants to dress it up. And it was a shock. But worse than that, everyone else in the world was watching. Saudi Arabia, India, Brazil, Malaysia, and they're saying, and Turkey and others, and they're saying to themselves, gee, what if the United States doesn't like what I did? What if they don't like my policy? What if there's a war in my neighborhood and they're not in favor of it? Are they going to freeze my treasuries? Well, until a year ago, you would say, well, of course not. They would never do that. Well, they did in the case of Russia, and they will potentially in the case of these other countries. So that was the catalyst. The idea of getting out from under the dollar, yeah, it's been around a long time. The feasibility of that was limited, capped really by the absence of a bond market big enough to absorb global savings. But now the countries are saying, well, what good is it to have my savings in treasuries if you're just going to steal them?